Computation of net GST payable. It's very easy to find out the net GST payable. So the inward supply minus outward supply tax, you will get the net GST payable. In your account you have 1,15,000, but you have to pay 1,08,000. So the payable amount is less than what is the amount available in your ITC account. Here with respect to CGST, we don't have any amount to set off. So still you need to pay 33,000, and with respect to SGST, you need not to pay any tax with respect to SGST. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Dear students, welcome to this new session on unit Input Tax Credit. So in this session, we will be solving few problems based on the topic Input Tax Credit. So looking into the first question, problem number 1, Jagrut's traders supplied goods at rupees 46,000. They received inward supply of goods valued at 20,000. The supplier has charged state GST at 18%. Calculate the tax payable by Jagrut's traders. So yes, we all know that what is input tax credit. What is input tax credit? Taking the credit or taking the advantage of whatever the tax we paid on input. Then again, what is input? Input is nothing but the materials used for producing a product, like raw materials or any machineries. So the materials used to produce a product are called inputs, and whatever the tax is paid on that particular materials, that tax can be taken as credit while you are paying the tax on the final product. For example, you are purchasing a raw material like rubber. Okay, you are purchasing the raw material rubber. So from that rubber, you manufactured a tire. Okay, what do you manufacture? You manufacture a tire. So on rubber, at the time of purchasing raw rubber, you paid 100 rupees of tax. You paid 100 rupees of tax. So now on final product, that is on tire, you are supposed to pay 200 rupees of tax. You are supposed to pay 200 rupees of tax. So now what you will do? You will not pay 200 rupees of tax. What you will do? You will take the credit of input tax what you have already paid, that is 100 rupees. So at the time of purchasing raw rubber, how much you have paid? You have paid 100 rupees tax, no? So what you will do? You will take the credit of 100 rupees. So final tax is how much? 200. So 200 rupees minus 100 rupees of tax which is already paid at the time of purchasing the raw material. So deduct that 100, what is the remaining tax? 100 rupees. So this 100 rupees is supposed to be payable by the business entity. So with respect to the same concept, we are supposed to solve the problem. So Jagrut traders supplied goods at rupees 46,000. That means they supplied goods. Supplied goods is nothing but what? Outward supply. We are selling the goods. Okay, we are selling the goods. They received inward supply goods valued at 20,000. They are selling the goods worth rupees 46,000, and they were also received the goods, inward supply. Inward supply is nothing but receiving the goods worth rupees 20,000. So while he is receiving the goods, he is supposed to pay tax on those goods. At the time of selling the goods, that is on outward supply, whatever the tax is payable by Jagrut traders, he is going to take the input tax credit benefit. So calculate the tax payable by Jagrut traders, and the applicable GST is 18%. So it is very much easier to solve the problem with respect to input tax credit concept. So we will make 3 columns: particulars, CGST and SGST. Usually we are supposed to consider IGST also, but here we have the transaction with respect to CGST and SGST. So we are considering only 2 taxes, that is CGST, SGST. So output tax on outward supply. Output tax on outward supply. Here what is the outward supply here? It is 46,000. Outward supply is 46,000. Rate of GST is 18%. But here the transaction is happening within the state. We have to assume, because Here is not mentioning that from where to where the transaction is happening. So what we are supposed to assume? We are supposed to assume the transaction is happening within the state. So CGST and SGST applicable. So 18% divided by 2, 9%, 9%. So 9% each on 46,000. If you calculate 9% each for CGST and SGST, you will get 4,140, 4,140. Next, less ITC on inward supplies received. That is input tax credit on inward supplies received. Whatever the input tax credit you have received with respect to inward supply, we are going to deduct it. So the inward supply value is 20,000 and same rate of GST, that is 18% divided by 2, 9%, 9%. So you will get 1,800, 1,800. So on outward supply, you are supposed to pay 4,140, 4,140 of tax. But on whatever the goods you have received as inward supply, on those goods you have already paid the tax of 1,800, 1,800. So now what you will do? You are going to deduct this 1,800 from this 4,140. So what is the remaining balance? 2,340, 2,340. So this amount is supposed to be the net tax payable by the assessee. So why this amount is called net tax payable? Because the tax payable on outward supply is 4,140, but you have already paid some tax on some purchasing of inputs, that is 1,800. So you are going to take the advantage of this tax what you have already paid, that is 1,800 from 4,140. So the balance is 2,340. So this 2,340 is the net GST payable by the assessee. So I hope all of you understood how to solve the problem. It's very easier. Just you have to understand what is outward supply and what is inward supply, how we are going to set off the outward supply and inward supply taxes. So moving on to the next problem. Problem number 2. Mr. Madhu as supplier gives the following details. Compute GST payable. So sale, that is intra and interstate. So intra is nothing but within the state, inter is nothing but between two states. So outward supply with respect to intrastate 12 lakh, with respect to interstate 4 lakhs. Next inward supply with respect to intrastate rupees 5 lakh, with respect to interstate rupees 1 lakh. So opening balance of input tax credit 40,000, IGST, CGST 30,000, SGST 70,000. So the supplies are exclusive of GST at 18%. So using this information, we are supposed to find out the net GST payable by Mr. Madhu. So first we are supposed to compute the output tax payable on outward supply. So what is outward supply here? The outward supply is 12 lakh and 4 lakh. So on what we will pay the output tax? We pay the output tax on outward supply. We pay the output tax on outward supply. So outward supply is how much? 12 lakh and 4 lakh. So moving on, intrastate supply, that is rupees 12 lakh. So what is the rate of GST here? It is 18%. So 18% intrastate is nothing but within the state. That means CGST and SGST is applicable. So 18% divided by 2. 18% divided by 2, how much you will get? You will get 9%. So 12 lakh into 9%, how much you will get? 1,08,000 CGST, 1,08,000 SGST. So total of 18%, 9% plus 9%. Next, interstate supply. So what is the value of interstate supply? It is 4 lakhs. Rate of GST 18%. So 4 lakhs at 18%. So only IGST is applicable. Why IGST is applicable? The transaction is happening between two states. So IGST is applicable, rupees 72,000. So now total the value, because we have only two supplies with respect to outward supply. One is intrastate supply and another is interstate supply. So here IGST is supposed to pay 72,000 and CGST is supposed to pay 1,08,000, SGST 1,08,000. So now we got to know what is the output tax payable on the outward supply. So moving on, Computation of input tax is nothing but the tax paid on inward supply. So in this problem, we have inward supply rupees 5 lakh and rupees 1 lakh. So intrastate supply 5 lakh 9%. Why? Because intrastate, within the state. So CGST and SGST is applicable. So 5 lakh into 9%, you will get 45,000, 45,000. Interstate supply 1 lakh at 18%, you will get 18,000. So only we have these two transactions. So 18,000, 45,000, 45,000 total tax on inward supply. Moving on, computation of net GST payable. It's very easy to find out the net GST payable. So the inward supply minus outward supply tax, you will get the net GST payable. So opening balance of ITC. Yes, the opening balance of input tax credit is given in the problem. So here you can see the opening balance of IGST 40, CGST 30 and SGST 70,000. So opening balance of ITC 40,000, 30,000 and 70,000. Add tax on inward supply. Whatever the tax you paid on inward supply, add the tax amount with the opening balance of ITC. That is 18,000, 45,000, 45,000. So from where you got this answer? Here you can see total tax on inward supply 18,000, 45,000, 45,000. Just you take this value to net GST payable format or this table. So 18,000, 45, 45. Just add the values. 40,000, 18,000. You will get 58. 30 plus 45, 75. 70 plus 45, 1 lakh 15,000. So total ITC available is nothing but total input tax credit available to Mr. Madhu. So from this amount, from this total values, Mr. Madhu can claim his output tax and he can pay the remaining tax to the government. So less outward tax. Yes, less outward tax. So where we find out the outward tax? Here in the first table, we find it out the output tax payable. 72,000, 1 lakh 8,000, 1 lakh 8,000. So outward tax 72,000, 1 lakh 8,000, 1 lakh 8,000. So in our account, what is the available ITC we have? 58,000. In our account, what is the available ITC we have? 58,000. So available amount is 58,000 and you are supposed to pay the tax of 72,000. So still you are not having the sufficient balance with respect to IGST. You have only 58 but you are supposed to pay 72. So still you need to pay rupees 14,000. Next, with respect to CGST. In your account you have 75,000 but you are supposed to pay 1 lakh 8,000. Still you need to pay 33,000. Next, with respect to SGST. In your account you have 1 lakh 15,000 but you have to pay 1 lakh 8,000. So the payable amount is less than what is the amount available in your ITC account. So still you have 7,000 rupees of positive value. That means you have 1 lakh 15,000 but you have to pay only 1 lakh 8,000 but still you have the credit of 7,000 rupees. So you can use this credit, you can use this SGST credit to set off IGST. So here you have extra 7,000. You can set off the 7,000 with IGST. So set off of IGST from SGST. Here you still have to pay 14,000. Still have to pay 14,000. But in that 14,000 you can set off the excess amount what you have here with respect to SGST of rupees 7,000. Okay. You will get, so still under IGST you need to pay 7,000 rupees. Here with respect to CGST, we don't have any amount to set off. So still you need to pay 33,000 and with respect to SGST, you need not to pay any tax with respect to SGST because he had surplus amount in his account. So whatever the outward tax payable under SGST is fully cleared and the excess amount of 7,000 rupees is set off with IGST. So now the net GST payable by the assessee is 7,000 under IGST, 33,000 under CGST and nil. You need not to pay any tax under SGST. So this is how we are supposed to find out the net GST payable. Moving on to the next problem, Mr. Raghu, a supplier, gives the following details. Compute GST payable. So sale, outward supply, inward supply, intrastate sale 30 lakhs and 17 lakh with respect to inward supply, and interstate supply 8 lakh with respect to outward supply, 2,50,000 with respect to inward supply. So opening balance of input tax credit, IGST 90,000, CGST 55,000 and SGST 1,50,000. So the supplies are exclusive of GST at 18%. So moving on to the solution part, computation of output tax. So intrastate supply 30 lakh into 9%. So 9% with respect to CGST and 9% with respect to SGST. So if you compute 9% on 30 lakhs, how much you will get? 2,70,000. Next, interstate supply, how much we have with respect to outward supply? With respect to outward supply, we have rupees 8 lakhs. So 8 lakhs into 18%, you will get 1,44,000. So now total tax on outward supply, it is 1,44,000 IGST, 2,70,000 CGST and 2,70,000 SGST. So moving on, computation of input tax. So intrastate supply, we have 17 lakhs. So 9% CGST, 9% SGST. So 1,53,000, 1,53,000. Interstate supply, we have 2,50,000 at 18%, you will get 45,000. So total tax on inward supply, 45,000 IGST, 1,53,000 CGST and 1,53,000 SGST. So now moving on to compute the net GST payable. So opening balance of ITC, we have 90,000, 55,000 and 1,50,000 with respect to SGST, and add tax on inward supply, that is whatever the amount we find it out in the previous table, this one, computation of input tax. So this is the tax on inward supply. So add these values, 45,000, 1,53,000, 1,53,000. So total these two values. So 1,35,000, 2,08,000 and 3,03,000. So that value is called total ITC available. ITC is nothing but input tax credit available. Next, less outward tax. So in the first table we find it out the tax on outward supply. So that is 1,44,000, 2,70,000, 2,70,000. So now deduct that 1,44,000, 2,70,000, 2,70,000. See, in our ITC account, input tax credit account, in our ledger balance, we have 1,35,000. But how much of tax I am supposed to pay outward tax? 1,44,000. So the available amount is lesser than the amount what I am supposed to pay. So still how much I am supposed to pay? I am supposed to pay 9,000 with respect to IGST. Moving on to CGST, in my account I have 2,08,000 and I am supposed to pay rupees 2,70,000. So still how much balance to pay? It is 62,000. So with respect to SGST, in my account I have 3,03,000 balance and I am supposed to pay 2,70,000. So still how much I have? Still have the balance of 33,000 in my account. Okay, the available amount in my ledger balance is more than whatever the amount I am supposed to pay. So here we have 3,03,000, but I am supposed to pay 2,70,000. So still how much you have in your account? Still you have 33,000. So as I said in the earlier class, you can set off this SGST surplus amount with IGST. So in IGST still you have to pay how much? 9,000. So take 9,000 rupees from here to set off this IGST. So set off 9,000 rupees IGST from SGST amount. So 9,000. So you are supposed to pay 9,000 with respect to IGST. Now we are setting off it with SGST amount. So now the net GST payable is nil. Here you can't set off the CGST with SGST. So there is no provision. So that is why still you have to pay 62,000 rupees of tax under CGST. And SGST, in 33,000 you paid 9,000 rupees here with respect to IGST. Still what is the balance you have? Still you have 24,000 rupees of balance in your account. So under SGST, tax payable is nil. So IGST tax payable nil, CGST 62,000, SGST nil. So net GST payable is nil, 62,000 nil. So this is how we are supposed to calculate the net GST payable under input tax credit system. So I hope all of you understood the topic. We will meet in the upcoming classes. Until then, thank you all.